Folks, I'm Melly Little, and this is your weekly TA wrap, where we take a look at these markets and we do it from a neoclassical perspective, asking ourselves what happened last week and what does it tell us about the coming one. As usual, I do this show once a week, every Sunday night, live at 9 o'clock Eastern Time, here from the base of the Rocky Mountains. It's a windy, cold set of mountains out here tonight. It has been a cold week or two now. And it's been cold on the market too. The market has struggled. If we look at the numbers here from the prior week, you can see not exactly what you call a big move to the upside, but instead on the downside. Down 1.7% on the Dow. Started the week at 16,020, finishes at 15,755. The Nasdaq down 61, 1.5%. The S&P's down 1.6%, losing almost 30. The Russell was the big loser last week, down 2.2%, traveling from 1131 down 1107. Those ending numbers, give you an idea of what's happening. If we take a look at the charts, there we can see just what kind of damage we did, or what kind of damage took place. Let's pull this over so we can get the weekly as well. And on these charts, you can see the S&Ps. I think we talked about it last week. We're probably going to try to get back into that swing point high. That's the retest regenerate zone. 1775.22 is the number. That is where this thing traveled to on. There we go. I'm trying to get my tool here so I can draw. That's where it traveled to last week. That's the zone right there. You can see it's right inside of it, or right at it, I believe. 1775. We closed just outside, I believe. 17. Let me see the number. 1775.22. We closed at 1775.32. So we closed 10 cents over the retest regenerate zone. That's a good thing, right? Volume's tailing off. You're coming in with less volume. Things should bounce, right? The breakout had 33.2, came back with 30.6. The swing point high itself has 35. So you're coming in, you have less volume, that thing should try to bounce. If we look at the NDX, actually let's go to the Nasdaq. On the Nasdaq, you actually are in the higher range. On the higher range, the price point there, that low is 4,004. You close just underneath it, 4,098, right at the round number 4,000. What this one's doing is slightly different, but same idea. Here you don't have a swing point high that was broken, right? Your last swing point low is way back here. You've already done the retest regen. That took place right here. What you're doing in this case is you're simply trying to break down the higher range. That range, if you draw it in, is up in this area, right? Right now it's to the bottom of it. Can it hold it? Can it regenerate higher off that range and hold it? If not, it's going to come to the next range and then try to work its way into that one. So NDX sitting right at the bottom of the range. SPX doing a retest, regen so far, succeeding in that move. The Dow Jones. Dow Jones is weaker than the SPX in terms of the move down. The swing point low was broken already. We'd already had a sideways trend change. We just got that on the SPX on the move down. The prior breakout was in this area that is already off the chart over here. But essentially, if we just take this as a retest regenerate zone, it's coming back into it. It already had done it, so it's really not applicable at this point. What's applicable is the support zone, and it's coming into it, and you got another swing point low here, 15,672. Now, if it breaks that one, it's going to go bearish on the trend. What happens with the trend transitions, just like ABCD structures, once you start seeing one or two break, pretty soon you see a bunch of them break. And if I go over to the tools, to the current market trends, and pull those up, you can see some of those have already started to change, and you're starting to see changes in trend. You're seeing it there. If we pull this up farther, you're seeing it, even in additional ones like here, the staples, the healthcare, and utilities already bearish, and it's actually sideways on the intermediate term time frame. So you're starting to see multiple indexes, multiple sectors losing their trend and transitioning. And when they transition, they typically all start to transition. And so if we go back to the Dow and look at the Dow, will the Dow be the first index to actually do that transition as well? And that transition would happen here on this break, on this area right here. Let me get the right color so we can actually see it. It would be this area, right? Can we break underneath that swing point low? And realize there's a couple of them not that far away. If we look at the price points, you could get two of them here fairly close. The numbers 15,672, the other one's about 50 under it, 15,622. Now, if we go over to the weekly, the danger on the weekly really doesn't happen until you get down into this area, right? And you can see a bunch of them within a close proximity to each other down there, but that's going to take a lot of work to get down to there. 14,719, 14,551, 14,444. So you've got another, 14,719 just from this swing point is trying to get to. That's another, what is that? That's another 1,000 points at 900 points, right? Now we came off, just to give us some context, we came off so far from 16,174 down to 15,700. So we've came off about 450. So even though 900 sounds like a long way away, we've already done 450 off the top in the Dow. Now the Dow is still trying to finish off, to finish off this conversation, is still trying to finish off this ABCD structure that measures to about that price point, that low. It's about another 60, 70 points down. So the Dow still trying to work its way lower, even though we're seeing the SPX hold on the first retest regenerate attempt, and we're seeing higher range of the Nasdaq still holding. Now, the weakest one lately, as we saw in the beginning numbers as we started, is the Russell. The Russell had already finished off an ABCD structure, right? And typically when you finish these off, you do one of two things. You either go sideways or you start back the other way. Well, this one has started back the other way, but it hasn't got very far. And if it doesn't get far and starts to turn, it's going to set up another ABCD structure. It hasn't broken the swing point low yet. The support zone is right underneath. That's where it's holding right now. If it breaks it, if it comes back fast and breaks it, that measurement is going to take it almost to the next one. And you can see how that would be a trend change here, potentially a trend change there. The trend changes are important once we start seeing them in one or two, usually two or three of them, then the rest of them start to follow. it's starting to look as if this may be the case. And the reason I'm starting to lean that way is because if I go look at Europe, Europe still has issues. And we've been talking about Europe for a while. So let's pop over to the European markets. We'll start with the CACs, which is the weakest of the group. The ABCD structure here on the daily measures into the swing point low as you see it here on the weekly. So the ABCD structure over here is going to take it down into this area. That's where it's trying to get. It's another 3% or so. Actually, it's probably a little bit more. What you don't have is you don't have the same extent of the move on the FTSE. The FTSE itself looks like this one. The ABCD structure can take it about another % or so. Right, so you got about this much of a move to go, somewhere in this area, which is where your support zone is. And if you look at the what is it, the DAX itself, another 1.5% or so. The DAX has the same sort of ABCD structure. It broke down as well last week. That structure takes it down into this area, and this is the one that's going to be the one to watch, because this one's going to try to take out multiple swing point lows, and it looks to me like it's going to try to do it tomorrow. If it does, you're probably going to get a fast move in the direction of the break, right, from 2 to 3 bars. 2 to 3 bars, depending on how fast and how far this moves, can easily take you down into the bottom of this zone, or more likely into this bar. That bar is the bar with volume. You can see the big volume expansion there. That is the October 18th bar. Top of that guy is 8865. The bottom's 8804. Even though this ABCD structure doesn't measure to that, if you get the break of multiple swing points, you can easily get a push down that extends farther than it should. And I think that probably is a reasonable target. If it hits it, FTSE finishes off its thing, then the more than likely the CACs is not going to finish. And if the CACs is not going to finish, that says the CACs probably has more to do once you get a bounce. And so if that's the case, then what can you expect? Well, once they finish off ABCD structures, then they get a bounce. And in this particular case, look at what the next set of breaks are going to do here. We were just talking about it on our market. You've already got a transition here to sideways, right? If you break the next one, that's going to transition things to bearish, right? You're going to get a bearish trend on the move down on this time frame. Now it's still going to be bullish over here, you know, right? That's this area here, but you're going to have a bearish trend on a short-term time frame. Again, once it starts happening in multiple indexes, it begins to happen in you know, once it happens in 2 or 3, then you start getting it all over the place. And if you go look at some of the other markets in Europe, that is what's happening. Here's the DAX again. It's already happened there. If I pop over and I look at like Belgium, you know, Belgium, it's already happening. It's already bearish. If I look at Amsterdam, I think this one is, that's the Euronext Belgium. Here's the Amsterdam. You got a bearish here, and you can go down the list. It's already happening, folks. So you can see it happened in the weaker ones first. Now the big ones are getting pulled down. As Europe gets pulled down, that makes it very hard for the United States to go up. And that really is the story still. Popping over to the major sectors. So I already talked about a couple of them trying to break down, or actually having broke down. For example, if I go in here, you can see the XLP has already broken down. Right, so you got a breakdown on the XLP. It's already sideways. You've got the same thing on the utilities. Actually, the utilities are even worse off. You have the same thing in multiple of these markets, and what's about to happen is you're going to get it in more. So if I turn to, say, the energy sector, for example, energy, right at a swing point low. You can see it sitting there just waiting for a reason to break, and that reason looks like it's very close, whatever that reason will be. If you look at, you know, if I can just go across the list here, they're probably all going to look just about the same way. So if I go to the materials sector, you see it here in the materials too. It's trying to break down. right? Swing point low is not that far away. It got close, got a little bounce. You can imagine, you know, a scenario here where, you know, this thing comes up, it does its bounce, it comes into resistance, which is where it's at, it goes down, it breaks the swing point low. All across the board, I believe what you're going to see is you're going to see most of the sectors turn sideways or bearish. This one's already sideways, going to try to turn, it's going to try to turn bearish, all right, if it breaks it. Ox markets. The only thing I saw interesting there is I was doing my reviews this morning for my subscribers, and it wasn't even worth mentioning, but something worth keeping our eyes on is the TLT, right? Because the TLT is the bonds, and as I've said before, if the bonds start to break, right, and the interest rates really start to climb, it's going to be a big issue, and it's starting to look more and more like that's a good possibility. And I gotta quit this tool. This tool's causing problems again on drawing. So there's the bonds. You can see they're down here at the lows. The bonds are in danger of trying to break. If they break, it's going to be a real problem for the indexes. So definitely something you got to keep your eye on down here. The situation is not exactly as one would want it if you're bullish. So the bonds an issue. So let me turn to a couple of questions that were emailed to me. Let's do those while I have a little time. I can come back to some other things if there's time at the end. One of them was, Dear LA, question for the wrap. Long term on the weekly, monthly time frame. And this is on IBM. So let's take a look at IBM. Everybody knows what IBM and what IBM does, so I won't spend any time there. What is more interesting is what does IBM look like, which of course is what the subscriber wants to know. Okay, so let's look at it here. Okay, so alright, so the first thing that pops out at you is the big volume bar here. Alright? This was earnings day. Big spike down, gap down, right? And I've told you many times, they'll come back and close the gaps, right? This one did try to get to the swing point high, couldn't break it, right? And now here it is doing ABCDs on the way down. Okay, there's one here. That one measures down below that gap, it looks like. There's another one inside of it that looks like it's just about done. So you've got two nested ABCD structures, one inside the other one. One just finished, or is just about to finish, and the other one hasn't. And so if I look at those numbers, you know, that this one, that ABCD structure, what do we got here? So 186.24, it looked like 186.24 to 77.31, back up to, what is that, 80? Yeah, 80.18. Trying to see how far this measures. Looks like it measures to about 171.54, and that low is 172, so about a buck under that low. And the shorter structure looks like it's done. So that one is from 180.18. You take these off so I can see it better. 180.76. So I actually did the other one wrong. Let me put that in there. 180.76. That would measure, on the prior one, that would measure down to 172.09. Okay, so 180.76, 175.16, back up. Okay, and the reason I'm looking at it is this is the weekly. If that breaks, it makes a big difference. And it looks like it will break, but it doesn't look like it's going to break far. So let's look at the monthly now, since that's really the question. Alright, that low on the big spike down from August 2011 is 157. The one we're dealing with now is this one, which is the top of the zone, 168, right? Isn't that what this is? It's just below it. So it looks to me like what you're going to see here is you're going to see some sort of support come in, temporarily at least, in this area. And when it does, right, which can take you potentially to with this bottom, 168. Right, that's the support on the monthly. But I don't think it's going to give you much of a bounce when I look at the structure of the way this is traded. Yeah, actually that one has decent volume. That's got 168.88 is the low, and it's got 151 on it. We're doing 46, and we're halfway through the month, so we're not going to have nearly the volume. So I would think somewhere in this area is the spot to look at it, about 168, 169 to about this low, which is 172.5, and the ABCD structure is measured to about 172. So somewhere 169, 172 ought to be the spot. So you want to see it come in here, test this, have no volume, maybe bounce a little bit and come back and test it one more time would be ideal. Since you're looking at it on a monthly, you can give it enough time to see if it will do that. You'd love to see it test this low, 168.88. That's the October 1st low. Now, I don't know, the rest of the question is, where can it go? And when I look at this, because I have time tonight, I'm just taking a little bit longer than I usually do when I'm looking at these. This looks like a big rounded top, right? Kind of a saucer. Those are typically not the sorts of things you want to buy. And if I pull up the cube, let me get the cube here. If I pull up the cube, you can see you're young, right, in terms of the MTTF on the bearish trends on both the intermediate and the short term. So this thing can go for a while. It doesn't have to stop. So that part of it is not good. I would yeah, can you get a bounce back up into this resistance zone? 181, yeah, it's pretty easy to get back up there. This is 186, right? It wouldn't be hard. That's 182, somewhere up in here. Yeah, you could get that pretty easy on a bounce. But I just don't see a big long-term run, which I think is what you're asking me. I think what you really got to do is you got to let IBM sell off a lot more if that's what you're looking for, a long-term hold. And the area that looks most appealing is back down here. In particular, that swing point high, because that high, January 1st, 2010, was never retested and regenerated off of. And that would be the ideal buy on this time frame. Right? You come all the way back down there, you test it, you have nothing, right? There's decent volume in that area and a lot of congestion for a year. That would be the ideal spot. So yeah, you can trade it on this move down, but I just don't see a long-term play here until it gets a lot cheaper. Okay, that's IBM. The next one, let's see what the request was. This one was from Brian. Brian wants to know Yahoo, when it might be a good buy. It's showing relative strength. So let's look at Yahoo. Alright, so Yahoo, alright, let me get back to the weekly charts. Well, yeah, it's relative strength, alright. This thing hasn't even tried to come down while the market has, right? This thing's still hanging at the top. Okay, so you got decent volume here, nice wide price spread bar there. So that's the one I would pay attention to. Let's see what that number is on it. The top is 38, bottom's 36 and a quarter. And if I come back over here to the support zone, all the volume is at 34. Right around 34. Where's 34? These swing point highs? Even a little bit lower. So down in this area, that is actually 34 is where the support zone shows here. Right there, 34 and a half. Okay. It looks to me, and one of the things you can do with these is you can just look to see how far your support zone is away. There's actually a little thin one right here. I'll put a line on it because it's hard to see. Let me just clean the graph first. The line is right here. There's a little support zone. Let me get this out of the way. There. And that support zone is right there. You can see the blue bars. Right? There's a blue bar here and here. And that little support zone is right at the bottom of that bar. That bar is the December 4th bar. So if I'm looking for an ideal spot, I want to buy into the bottom of that bar. I think that would be the spot. You know, will it give you that kind of an entry? I don't know. Right now it doesn't look like it wants to give you anything. That's 36 and a quarter. 36 and a quarter. Support back here again in the 34 area. Right? So you make your buy up here, you make a no one down here if you have to, or if you're allowed to. Right? And you got all your swing point lows nested down here together. Right? So the big danger is down underneath here. So you got to protect against that. And your lows are on the way down, they're staggered. So yeah, I think the first buy is here, and that's where you have to try to get it off that bar. Okay, let's see, any other questions from viewers? No. So let me see if anybody texted one in. Yeah, we got one here. Let's see what this one is. ACAT. What is ACAT? Let's see what ACAT is. ACAT. I believe, if I remember, this is a machinery. They sell Arctic Cat. Okay, this looks just like IBM. We just looked at one just like this, right? Okay, so I don't know it, but I suspect this was earnings. Right, so you get a big push down, right? Gap down, wide price spread bar, gap down, probably off of earnings. And then what do? You climb all the way back up to close the gap. This didn't quite close the gap. IBM did. This one almost got there, right? And now it's starting to roll over. It's doing the same sort of scenario that we saw with IBM, and you're getting this rollover type effect, right? And the bad part about it is now you've got nested swing point lows, right? So if you break this area, you're going to get a faster move down, which is probably going to break that one, and is eventually going to take you right back down to the low. So I would not be trying to buy this thing. It's not set up correctly to start with. You've still got a huge volume of low hanging out here. You got one of those wake up in the mornings and you have a headache kind of feeling because your stock got creamed, right? And there's no reason this thing can't do it again. So this is just a danger stock if you ask me. If I look at it on the weekly, yeah, I mean, it's just, you just got huge volume hanging out there. So it came into, you know, this is interesting. Look at how this set up. There's so much to learn just by looking at the charts. I mean, this chart broke out on a big move, right? And I don't believe it did a retest regen. That high was 48.84, and you never got back to it. All right. So that's a retest regen waiting to happen. Okay. Now look at what it did. It came right into it, right, with huge volume comparatively. But what did it do? It came straight out of it. Right? These retest regens are like 82%, I think, or so. Right? First time back after 6 bars. Well, more than 6 bars on a weekly. Right? This is the weekly. So what does that do? Immediately when it does the retest, bang, right back the other way. But it's going to come right back into it. It's going to test it again. It's probably going to break it down because you hit it with way too much volume. Now the opposite scenario is that it does come back into this bar, right? And the volume is 0, right, comparatively, and you actually hold. I mean, that's a possibility because the second time back still is about a coin flip. It's about a 50% chance. But if it doesn't bounce again and can't get going the third time back, breaks it down. And then it comes all the way back down into this 43, 42 and a half area. So this is not a stock to play with. Stay away from it. There's other things that are much better than this. All right, folks, I'm going to leave it at that. It's a big week. You got Fed announcement on Wednesday. You got some PMI flash numbers tomorrow. There's a Philly Fed on Thursday. Of course, you got Fed pumping money in every day as usual. That never seems to change. And you've got Europe with issues, which probably caps us. The question is what happens as a result of the Fed, and how do we set up into the Fed? And I suspect that's where the trade's going to be, either before or after the Fed. So, if you're looking for the trade, looking to get long, you've got to play the European situation as it relates to what the Fed does or doesn't do with respect to timing over here. And then that would probably, that should probably set up whatever the trade's going to be. All right, I'm going to leave it at that. Thanks a lot, folks. Tune in tomorrow. We'll do it all again. We'll look at it on a daily basis. I think you're going to have, this is the last week of real trading, right? After this, it goes pretty much stone cold to the end of the year. Have a great one. Take care. Good night, folks.